Hello everyone, welcome to EPG Pathshala program. Myself Dr. Shubhabrata Datta, Professor and Head, Department of Social Work, Assam University, Silchar. In this session, we will discuss rural financial inclusion under the course Rural Development. Rural people in general and farmers in particular look timely support to utilize the rural resources optimally towards ensuring sustainable livelihood. For example, a farmer is farming certain products. It required financial support for purchasing equipments, for purchasing fertilizer, and for employing laborers for production. In the absence of a rural financial inclusive culture, that is lack of financial support, rural people tend to opt for migration to urban areas, which further entangle the vicious circle of poverty and vulnerability. That means a person living in rural areas failing to earn for his own survival automatically is being forced. There is a social power has forced him to move towards urban for his livelihood, and that is what is happening. The poverty in urban areas is also increasing. That means vicious circle of poverty is increasing. The success of the financial inclusion largely depends upon the effective and efficient delivery system coupled with awareness building of rural masses in general and the marginal section in particular. That means if there is certain provisions are created for the financial support, then awareness to be created among the masses, specifically to the marginalized section, so that they can get the best benefit and utilization of it. Addressing the systems that promote the exploitation and vulnerability of the weakest section is the prerequisite. Money lenders who promote money lending through unscrupulous means should be properly regulated, because they have no option. That's why they are going to money lenders and they are taking money with a very high interest rate, and accordingly due to that they will not be able to overcome their poverty circle. Role of non-government organizations, the NGOs, who are working in proximity with rural people would play a significant role in bending the gap between the people and the institutions. NGOs in the earlier module will say they work with the grassroots people, so they can bridge the gap between the government institution, that is financial institutions, and the people. The rules and regulations relating to the access of the financial support services should be made feasible and amendable to people in accelerating the indigenous ideas of social entrepreneurship. They should encourage enough through the system that they should move towards the social entrepreneurship generation of the practices. Simplification of the financial assistance will pave a way toward including women and other clientele groups to get connected to the financial institutions. Absence of rural financial inclusion culture, that is the lack of financial support, rural people gets entangled in the vicious circle of poverty and vulnerability, already stated. Financial inclusion is a relatively new socio-economic concept in India that aims to change this dynamic by providing financial services at an affordable cost to the underprivileged, who might not otherwise be aware of or able to afford these services. If a person, very marginalized, poor, would like to keep certain cattle as for bringing up and to sold and for earning money, needs some financial support. That support can be provided with an affordable interest rate so that the person can bear. Money lenders who promote money lending through unscrupulous means cannot be supportive enough for them. That should be strictly regulated by the government. And simplification of the financial institution will pave a way towards including the women and other groups, because it should be simplification of the system. Otherwise, people will not be able or interested enough to be a part into that. What should be the government initiatives in the directions? There is the nationalization of then existing banks in the year 1969 to make service to the bank to the common man. That was the initiative taken by the government in the 1969. There is the nationalization of the banking system. In the year 1981, the National Bank for Agricultural and Rural Development, in short form it is known as NABARD, was established to promote sustainable and equitable agriculture and rural prosperity. Specific bank initiated for look after the agriculture and the allied activities in the rural areas. Dadan Swarna Jayanti Gram Swarojkar Yojana, initiated in the year 1999 to create avenues of self-employment available to the poor, especially marginalized, that is the below poverty line families residing in rural areas. The National Rural Employment Guarantee Scheme, later known as Act, whatever it is, was launched after the enactment of the National Rural Employment Guarantee Act in the year 2005 to provide employment at least 100 days in the financial year. A person should have right to get 100 days employment in the rural areas. National Rural Livelihood Mission, there is another one, was introduced to overcome the shortcomings of SGSY in the year 2010 to improve the standards of living of the poor by building strong and sustainable grassroots institutions for the poor. And with this idea or the concept of regional rural banks, RRBs, was introduced in the year 1976 to cater the special needs of the rural and semi-urban areas, especially focusing on efficient credit availability for agricultural sector. Special bank was also created for agricultural sector. Then came Kishan Credit Card Scheme, designed to cater farmers' credit requirements. The scheme facilitates a single window system for providing credit in facilities like for the cultivation of crops, post-harvesting expenditure, maintenance cost for assets used in agriculture, and investment requirements in agriculture and allied activities for different purposes. If you have a tractor, to maintain the tractor, you can get support from that also. Now, financial inclusion in rural India to help to provide access of savings and credit to both. As mentioned earlier, credit markets facilitate the accumulation of human capital and physical capital. These also enable individuals to obtain insurance against negative health and other shocks. Financial exclusion directly or indirectly influence the livelihood of people as a financial inclusion, lead to growth of financial capital in any livelihood or livelihood comprised of natural, physical, social, financial and human capital. That means whatever the areas it is in there for the improvement, nurturing or practice, that financial support to be provided. Hence, there cannot be any livelihood without the ownership of the aforementioned livelihood assets. Financial capital helps in livelihood generation by improving the other assets, vice versa. Therefore, it improves overall well-being of the people. That means people can get support from disaster to improve the assets, both. Thus, it is very crucial for any rural economy to add the rural population to the formal financial support system. Financial inclusion is seen to be something more than the opening of bank branches in the unbanked areas. It is something more than that. It is not only the opening of banks is enough. In the context of various shortcomings in delivering subsidies, direct transfers using technology have been thought of. That means instead of providing cash to different options, direct money transfer to the account has been thought of. Technology adoption would be the key feature in this scheme for financial inclusion. Financial inclusion and financial literacy, that is important things. For rural financial inclusion requires educating the hitherto, the excluded rural people to know about the various available avenues. The people who never have any experience of banking, if you are going to introduce the financial inclusion system, make them to be understand what it is, what is the benefit, how they can get into it, and many other issues. SHGs, that means self-help groups, linked to banks are emerging as a low-cost option to mainstreaming the delivery system of financial services for the poor. Now, SHGs, self-help groups, are to be connected with the banking system for the financial services. Getting connected with the banking services not only give them avenues to financial support, but also pave a way toward liberating the poor from the clutches of moneylenders, who often charge them unscrupulously. So under the stress and the grab of the moneylenders, these are the people who will be able to come out. Establishing a safe relationship with the bank is a prerequisite to promote financial interaction between the rural people and the banking institutions. The task of spreading the suitable awareness among the rural people in general and poor in particular is pertinent. That means awareness generation to be created so that they can have the basic literacy in the financial inclusion. Now, financial inclusion and SHGs, self-help groups. SHGs linked to banks are emerging as a low-cost option to mainstreaming delivery system of financial services to the poor. Hence, better empowerment of the SHGs would serve to be a milestone in the process of financial inclusions. That means through SHGs, more banking system, more number of people to be incorporated into the banking system. Although there is a growing importance of SHGs as a source of credit to the poor and marginalized, there are little evidence of systematic internal functioning, though there are certain problems exist in the SHGs. Fine. According to an estimate, more than 1 billion people in the world would have access to mobile phones. However, more than 2.6 billion people do not have access to financial services. Very interesting. More than 1 billion people in the world have access to mobile phones, but 2.6 billion people do not have access to financial services, nor is a part of any formal banking system. With the objective of ensuring greater financial inclusion and increasing the outreach of the banking sector, banks have been allowed to use the services of NGOs, self-help groups, and other civil society organizations as intermediaries in providing financial and banking services through the use of business facilitator and correspondent models. That means, though banks have opened those services to be offered, but still users, that means the poor and marginalized, for whom these services are not coming in a large number. So it has been asked the bank that you take the support of the NGOs, self-help groups, or other civil society organizations who are directly working or connected with the grassroots populations. Provision of this kind of financial intermediation have opened a new and diverse avenues to address the issues of financial inclusion by banks. Now, what are the reasons there is uneven financial inclusion in India? That is exist, but what are the reasons behind that? Individual and household income level and the cost of financial services determine the options for saving the money. Where the rural areas, masses do not have enough money to pay the price, then they cannot use the services. As price rise, consumer will substitute away from higher priced goods and services, choosing less costly alternatives. Very interesting. Individual and household income level and the cost of financial service determine the options of saving the money. If I cannot have the enough money to afford my foods, then how the saving concept is coming? Subsequently, as the wealth of the individual rises, demand increases. Shifting demand curb higher at all rates of consumptions. If my demand increases, automatically cost will increase and automatically savings will less. As wealth rises, consumer will substitute away from less costly inferior goods and services, choosing higher priced alternatives. If someone can afford, will try to be better production, and that would be the high priced production. It is important to note that in India, for getting the bank services which people cannot afford to pay, because if you have to be in the banking system, you have to pay certain charges. A section of population even not in a condition to pay that too. This ultimately turns them towards informal money lenders. Automatically, they will feel comfortable to be the informal money lenders, though the interest rate is very high and exploitative conditions are there. Income generation, therefore, is crucial to increase the demand of financial services, so that the main focus should be on the enhance the wealth, assets or capitals in the rural masses. If this we can increase, automatically the banking customers and the banking patterns and services will also expand. Demand for opening up the saving accounts also related to the services available for the rural masses, especially credit services. But banks fail to provide credit in most of the rural area because rural masses do not fit to the criteria to demand loan from the banks. Because if bank wants to provide loan, bank have certain regulations, certain formalities, and most of the rural population do not fit to that formalities, do not fit to that category, and according to that they cannot get the support of the credit. Where the rural masses are mostly deprived of the banking services because of rigid criteria to avail banking services, rural women are the worst sufferer. If the rigid system, redaptism and others, a rural male person cannot get access to an account, then women will be little behind that. Rural women are not considered to be adequate to carry out the financial deeds in households. That is, it is our social attitude that needs to be changed. Rural women do not have the privilege to educate themselves to earn the livings. They have to be dependent upon their husband to open as well as to run any bank account, and most importantly, they cannot ask for credits as they have minimum to no assets to guarantee to the loan. To get a loan, someone has to be a minimum assets, and in the name of women, the assets is very limited or negligence, or there is a nil. So they have to depend on the husband. So how the bank account will be open, and how, if it is open, then how they will get the loan? So almost it is a meaningless. Sometimes, despite of having assets to guarantee the loan, women do not have decision making rights, as the decision making is left to the male members of the family. Still, a woman have assets. She is eligible to get the loan, but she cannot decide. If the husband or the other male members asks not to be go, she will opt by. It is found that rejection rates for loan for women in India are more than those owned by the men. Rejection rate by the bank to a woman to say no to loan is more number than the men. Financial inclusion and the problem is the uneven growth of India. Financial inclusion in India is rather interdependent than independent phenomena. How it is? Rural financial inclusion cannot be achieved only by increasing banking services in the rural areas. It is not possible. The demand for the banking services has to be increased simultaneously. If bank comes, it does not mean the rural people will come and will start opening account into the bank and will start depositing the money or the credit of the money. No. It should have to be a demand that yes, as a people, we are also interested to open the account. However, the rural India are deprived of both availing the financial services and the demand of the people to use it. Because of the negligences, because of certain restrictions, they are not interested to use it. It has been explained that people's demand will increase only when they have sufficient assets to buy those services. If I have excess, then only I can go and I can take the services. So that is the mindset of the rural people. In India, there has been a decrease in the GDP from agriculture and a continuous rise of GDP of the services. In other modules, we have explained that. However, most of the population in rural India are dependent on the agriculture for their livings. Though contribution is less, but dependency are more. Therefore, without a secure livelihood, it is difficult to raise the demand for rural masses to use the financial services. The socio-economic census 2011 reveals that almost 3/4 of the rural households live with a monthly income of less than 5,000. More than half of the rural households do not own land, or more than half of them are casual labor. So under these circumstances, financial inclusion system for them is not going to make any sense, or it will not be meaningful. Education is one of the important assets for any livelihood generation. In India, where universal literacy is still to be achieved, even in urban India, the situation of rural India is still far behind than urban India. According to the population census 2011, urban India has the male and female literacy rate 88.76 and 79.11, where in rural India has the male and female literacy rate is as 77.15 for male and 57.93 for the female. It reveals that rural population in India has a less opportunity to understand and utilize the financial services in India. Picture is clear. Similarly, health services to rural India are poorer than the urban India. The infant mortality rate, anemic children, women and pregnant women, underprevalence in children, awareness regarding various diseases reveals the skewed development of India in regards to rural and urban India. The uneven development between the rural and urban India are become more apparent when infrastructure is observed. Rural India is far behind urban India in regards to road, electrification, drinking water, sanitation, government as well as non-government institutions also. So that is the condition where the problems of financial infrastructure and others are very compound and complex in rural areas in comparison to the urban, whether it is health, education and other issues. All the efforts and aspects cause to reduce the overall livelihood of rural population, and the people without any secured income find it difficult to include themselves in the financial formal system in India. In other words, any bottleneck to secure people's livelihood influences to increase the demand and financial services negatively. Along with the aforementioned uneven development of rural India in regards to income generation, banking service in India is also uneven, because income pattern in rural India is also compared to differ, and there is a wide differences, and due to that banking pattern is also affected. There are 189 million saving account in rural and semi-urban areas, whereas in urban and metropolitan the total number of saving bank accounts are 139 million. If we compare the total number of population in rural India, it can notice that the number of saving bank account in rural and semi-urban area are very, very lower and marginal in number as compared to the urban and metropolitan areas. 30% population, if we consider, are living in urban areas. They are having 139 million saving accounts, whereas 70% of the rural population is having 189 million saving account. It's a very wide differences. Moreover, if we see the share of deposit in the bank account rural areas have around 10% of the total savings in India, as per the Reserve Bank information 2015. Now let us come to the conclusion of this module of the discussion. Financial inclusion is thus cannot be achieved until both affordable banking services as well as people's demand to utilize those banking services enhanced. Both banks should be established, service to be offered, and people's to be mindset to be ready to get the services. That means the demand from the people to be created. Banking services should be made more accessible to the rural masses. So bank should be reached to the masses, to the rural areas. At the same time, people's power in regard to education, health, income should be raised so that they have better power to utilize financial services. If they are not powered enough, if they are not secured enough in education, health and income, how they should be interfering into the banking system? Very questionable. It is also necessary to focus on minimizing the unevenness between the rural and urban India. There is an uneven and skewed distribution, financial, health, education and others. That should be minimized so that the rural and urban have at least similar kind of development space and provisions. It isn't there. With this, I am concluding this module. Thank you.